Good evening, Steve here from the turtlefollower.com with your strategy session for Tuesday, September 30th. Basically had a lot more of the same action that we've had for the past week or so. Market is really just coming into that support. It's been down, you could see here, 1, 2, 3, 4, 5, 6 of the last 8 days has been down in the market. With that said, though, the portfolio is actually holding up fairly well. We are still positive since inception. Of course, not as positive as we were a few weeks ago, but nonetheless, we are showing a gain in the portfolio. So you can see here what's happening with the S&P is we're coming back into test. It looks like that 50-day moving average and the trend line. It looks like today we've closed below the 50-day, but you can see here the last couple times we've closed below. We've rallied fairly quickly and retaken that 50-day. On the weekly chart, again, the trend is higher. All right, here's that trend line. We're coming into the 20-week moving average, which is this solid gray line. And again, I think what may happen here is, and it may or may not, but I think we may actually break the trend line this time around and revisit the 1900 level. And I think at that point we may put in some sideways consolidation between 2000 and say 1900 and get ready for the next move higher. But we've seen it many times before. A trend comes to an end, and what happens is instead of pulling back, it actually just moves sideways, and resets, rests, and gets ready for the next move higher. So not saying that that's what's happening. That's just kind of what I'm looking at. One of the reasons for that is the frequency that we're testing the 50-day moving average and this trend line. You could see back here from February, we tested in February and then again in April, and then it was a while, and then we finally tested again in the middle of August, and sure enough now we're testing again not even a month later. So that's one thing that I look at. And the more times that we're going to test that trend line, the more likely it is going to fail. NQs. All right, this was the only positive indice for today. So moving sideways, 50-day moving average still supporting, trend line still supporting. You can see here on the weekly it has some move or some room down to that 20-week moving average, but for right now we are just moving sideways. And the YM Dow futures down 46 points. Again, 50-day is still supporting, trend line is well away. So I would see we should not break 16,829 would be the line in the sand for me. If we break that, then obviously next support level would be trend line. And the final one, the Russell, down 1.56. It seems as though the Russell is the one maybe leading us lower. So we had the symmetrical triangle here. So we had a low, the high, a higher low, a lower high, and then sure enough, one of them had to break at some point. It seems as though it is the lows are breaking. And if you look here at the closes, the close of 1103 was really the lowest close until today. Today we have a close here at 1093. So the next level I would be looking at for the Russell would be somewhere down here at 1075. So, coming into that 1075, you could see on the weekly chart pretty much coincides with where we found support for the last year or so after this run higher. So maybe this is something that the S&P is going to do. You could see similar to what I was talking about is there was a trend in the Russell. It was moving higher, and then sure enough that trend broke, but instead of actually reversing, let's cancel the right this way we can actually see it. So there's the trend line, and instead of breaking and pulling back for a substantial correction, instead what the Russell has done is move sideways in this range and pretty much is resting. It did that previously before, right in here in the beginning of 2012. All right, 2012, that led to the rally, then it's doing it again. So, this is kind of the idea of rest, run, rest, and then hopefully we're setting up for a run higher on a break over 1200. But for right now, really just in sideways consolidation, and we'll see where it goes from there. All right, as far as our positions go through these real quick. Not much has changed. Apple was up 0.64%. You could see that's still in the box. We are still using this 97.97. Let's set that alert again. 97.97 as our stop level. I'm really looking for that break over 103. I think 103 can get us jump started again. You could see what's happening is we're really testing all-time highs from back here in 2012. So right now we're testing almost exactly 2 years ago. So it's having some issue there, but like I said, if we can break over that 103, maybe that's the break we need. But you can see here that earnings are coming up on the 17th. So typically what happens with Apple is there is usually a run into earnings and then a sell-off after. So let's see if that happens again. It hasn't happened the past few times. You can see here it just went sideways, but then after earnings it moved higher. And then sure enough, coming up to earnings in the middle of July, we had to move higher into that period and then a sell-off once earnings came out. So like I said, looking for that break over 103. ADM down 0.39, still holding that level of 50.38. Right now our stop is 49.08, but we are hoping to move that stop up on a break over this 52 area. Disney was up 0.23. Again, just consolidating. It's testing the 87.28 area. You can see here it's in a small consolidation. Okay, so it broke down and now it's consolidating again. So Disney may just need some time to move sideways. You can see what's happening on the weekly chart is that we are moving into that trend line and previous highs. So this would be the spot. If we were going to bounce, we would want to see it bounce here. Expedia, this is a nice looking setup here. Came right into the 50-day moving average, broke this small downtrend line that was in place. Or we broke that downtrend line and now we're moving higher. So looks like today it did test that 88.50 level. Wasn't unable to close above it, but hopefully on some continued move and continued strength in the market, if we can get it, that will actually break out over 88.50 and be able to adjust the stop to 83.49. Fidelity. This one looks like it's hit our stop and it looks like it's time to take these small profits that we have. You could see here we were using these two lows from 829 and 916 as our levels that we were trading against. Today, sure enough, not a lot, but down 0.34% with the gap down yesterday and the move higher. The fact that we could not continue that move today, even though the market was down, to me is fairly telling. The other issue that I see is this lower high. Okay, so we have a high here and a lower high that was negated by this breakdown. So what I'm looking at now is a potential change in trend. If we look at the weekly chart, you could see we are coming right into that 20-week moving average, and we are also coming into a trend line. So that trend line was broken, it looks like. So I would say at this point, we'll keep it on our radar, but for right now, I think it's time to take a pass and let's exit our trade in FIS at tomorrow's open. GD down 0.31, still consolidating. We were able to move our stop to this 122.50. You could see now that the 50-day moving average is above that level. Next level that I'm looking at is this 125 area. So I'm hopeful that if we can get a breakout over, say, 130, that the 50-day will trail higher and be at 125 fairly quickly. LUV moving sideways. All right, so it's in this box right now. We're still using 29.39, but you can see we're inching closer to moving our stop to that 31.78, which would be this low from this small consolidation. And when I say small, it's very small. I mean, this is really the only thing we have to trade against right now after the highs from the previous breakout. So we will move to 31.78 once the 50-day exceeds that level. And then maybe what's happening here is maybe we're putting in some substantial consolidation. Maybe we're resting and allowing that 50-day to catch up, and then eventually breaking out over 35 with a stop under 33.26 would be a great trailing stop level. And the last one, RSG, you could see came right into trendline support, 50-day moving average, retook it yesterday, and today moved slightly higher. So on RSG, we are still waiting for a breakout. Okay, so we're right back into that range, and we're waiting on the breakout over, I think it's 39, but let's check that real quick. 39.50. All right, so if we can get that break over 39.50, then our obvious next stop level would be here at 38.52. But let's see what happens there. One thing I want to go over before we go into the weekly watch list is you will see that earnings are coming up in most of our positions, actually all of our positions. Okay, Apple is coming up, ADM. So in the next few weeks, we're going to go through earnings. Whether we're still in the positions or not by then, that remains to be seen. But the fact is, we do hold positions through earnings. All right, that's just part of. I will not take a new position if earnings are within 2 weeks away. But if there's a current position that's on, it will be held through earnings unless we are stopped out for a breakdown of any reason. But I just want to make that clear that everything is held through earnings, and that's the intention of this whole system. Is we're not trading around a position, we're just putting it on, letting it work, and using our price levels to manage our risk. So the watch list, there looks like 7 or 8 positions that were higher. EMC, okay, this was one we were looking at last week. We're still waiting on that break over $30, and if we got it, looks like our potential stop level could be this 28.60. CenturyLink up 1.21, still consolidating. You can see the bounce off the 50-day moving average. Very nice looking setup there, and you can see we're moving right along this trend line. All right, so nice setup, trend line. We're looking for that break over 41.30. Alcoa, again, this was one that I was personally long. I was stopped out. Now I'm looking for a reason or a way to get back in. And it looks like 17.26 could potentially be that reason. It looks like we may be bouncing off of this this double bottom here. And let's see what happens when we get up to 17.26. But this is something we've talked about, especially tonight. But after we had this run, instead of the stock actually, it did pull back, don't get me wrong, but instead of it coming back down and coming back into like the 12 area, is now just looks like it may just want to move sideways. We bounced right off the 20-week moving average, which is the 100-day moving average, a little bit longer term support. But nonetheless, the trend really, if you look at the weekly chart, is not damaged at this point. All right, the 10-week is above the 20-week, and we are right now pinched between the 20-week and the 10-week. So let's see if we can eventually get that breakout over 17.30, and then we would be able to enter that trade once again. Tyco, this was one. Let's take some of these. Actually, you know what? Here, this is what we're doing. So Tyco's got a lot going on in this chart, but what we're looking at is there is a series of lower highs and a series of higher lows. Right now we're bouncing off this 43.72 level. The first thing that we obviously need to have happen is to break this downtrend line here, this yellow line, and then the next thing that would have to happen would be to break 45.15. If that were the case, depending on how aggressive you want it to be, you could go ahead and put your stop here at 43.72 or even 42.68 and take a long trade in that. But again, looking at the weekly chart, nothing not to like here. Consolidating right into the 50-day moving average, really setting up nicely, similar to what it did on this previous pullback and bounce higher. That's exactly what's happening now, and we have some solid support right around these levels. So with Tyco, we really need to wait for that breakout. Allstate moving sideways. You can see what's happening with the 50 days curling under. You can see here on the weekly chart as well that we are in a nice uptrend, depending on how you want to draw that trend line. Maybe it's something more along those lines where we had a small fake out to the downside. But again, trend is higher. The 10-week is above the 20-week. It has been for some time now. And the fact is, this is a trade that you could have been in for a better part of 6 months, depending on if the entry signal fired off. And that's the whole idea with trend following is, we're not looking for 1 week or 1 day gains. We're looking for some substantial gains over a substantial period of time, and trying not to overtrade. Let the positions work for us. Kroger, really just waiting on that breakout. A couple stocks that we had that were down significantly today. LYB, as nice as this position this setup looked, right now we're getting some sell-off. But let's see if we're going to hold it in there. Let's see if we can reverse, get that break over 115. If you look here on the weekly chart, we are coming right back into trend line support on the weekly, as well as the 20-week moving average. Dow, another one that looks like it's getting ready to break down. I am long this stock. Again, this is one that's a little concerning for me. I was really waiting for the breakout over 54.50, but you could see here a lower high, and again another lower high. So we're coming right into a breakdown area. I'm still using this 51 level as my stop, which kind of coincides with a break of the 20-day moving or 20-week moving average as well. But you can see here, weekly chart, the one reason I'm not getting stopped out here is I don't feel it significantly broke the weekly chart. When it breaks 51, then that's a different story. And LEG down 1.47, pretty much tested both sides of the consolidation. And the one that's been on our list and we've talked about, the longer this moves sideways, the better I like it. All right, if this can move sideways for another 3 weeks, say, allow that 50-week moving average to come in, then eventually break over 93, I think we head to 100 real quick, and it gives us a nice tight stop, well-defined stop at 88.75. So let's see what happens with Home Depot, but that's definitely one that's high on my list to get long there. But as far as the market and our positions, it's really just we're not trying to overtrade this. As you can see, there's not a lot setting up for us. So that's one of the benefits of having a system and knowing when you want to be in and out. Is fact is, when the market isn't cooperating, a lot of times your positions won't cooperate. And if you have a stock on a watch list that is moving higher, and it's kind of bucking the trend a little bit, then that's when you want to be long. But right now we're not getting any of that. We're still remaining with our 8 positions. As I said, we will be exiting FIS at tomorrow's open. So we'll take that small gain that we have in there and move on. And right now we're just pretty much about 100% invested, and again, not using any margin after we exit FIS. And we'll see what happens. I mean, like I said, next week could, or even the end of this week could change. Everything could change, and we could be entering 2 or 3 positions at a time. But that's it for tonight, guys. So like I said, if you have any questions or comments, please leave them in the comment section below. Hit that like button. And follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel. All right, have a great rest of the night. See you tomorrow.